If you can't hear me, just send a note through the chat, but we're going to get started. I want to thank Kathy for inviting me to do this presentation and this discussion. At first, we were going to do just an open-ended forum, but I figure I'll give you guys a few minutes of basics, and then I'll open it up and look at everybody's faces, and we can have discussion. But if you think of anything, feel free to send it in the chat, and then once I'm done this short presentation, we can start with the open forum part. So my name's Dorothy Butala. We're going to go over Private Lending 101. I'm excited to have been asked to do this for the First Time Flippers group, and I did invite some people outside of the group, so if you're not part of that group, please find them on Facebook. If you're a friend of mine, you can look through my groups and you'll see them, that I'm friends with them. We're going to go over private lending. This is going to be geared towards people who want to do private lending, but if you're not ready for private lending yet, but want to know what private lenders are looking for, this is a great place to be, because you'll know exactly how to wow private lenders when you go to them with deals. So I am not an attorney, I am not a CPA, so I'm just giving you my background in what I've been doing over the past 12 or 13 years in real estate, and more specifically in private lending for the past few years. A little bit about me. I've been, I'm going to pause this for 1 second. My operations manager, who is new to my house, seems to have gotten into something over here, so we'll find him. And anyway, so I've been doing this for about 13 years, and I've done everything from wholesaling all the way up to syndication. I eat, sleep, and breathe real estate, and it's just something that fuels me. I don't have to abide by, going into 9 to 5 and working for the man, and I hate being a caged bird, so this is what gets me going. I have my license to sell real estate in Pennsylvania and New York. I'm very active with our real estate investment associations in the area. I have assets close to $2 million now, and I do multiple investment streams, but my main ones are doing buy and hold, BRRRR, and house hacking. So if anybody has any questions on any of those, you can feel free to drop me a line. Enough about me. Let's get into private lending. Just to show you a little bit, I'm not doing this to, wow anybody, but I want you to see, this is a screenshot from my IRA where I've been doing some lending from. And if you look on the right-hand side, everything in red is a payment, an interest-only payment to me that I get for notes that I have that are lent to people. You'll see in here there's a couple syndication as well, but that's going to be a different topic. But most of these are all my private borrowers' payments to me. So what I'm hoping to help everybody with is understanding who should become a private lender, familiarize you with the basics of lending and how to protect yourself while lending. Really, anybody who wants short-term investment timeframes, maybe a couple months to 2 years, anybody with strong market knowledge in real estate and renovation knowledge, this would be great for. Those who don't need or want any tax benefits, you're not going to get any write-offs for this, unless you incorporate as a business and then make this a business, but that's outside the scope of what we're going to talk about. And then those with a higher risk tolerance, because you are going to be giving cash away, but I'm going to show you how to protect yourselves to reduce that risk and make calculated risks. So if you're a real estate investor and you want to expand your portfolio, this might be a good way to do it. If you don't want to deal with trash tenants and toilets, if you are a doctor, lawyer, CEO, any type of professional who has a great income or a surplus of cash, this would be great for you. If you have a sizable retirement account, this is how I got started with my retirement account. You're a retiree and you're looking for passive income. You own real estate or a trust fund, tech entrepreneur, lottery winner. Basically, if you have a bulk amount of money and you're willing to lend to other people who are trying to get their real estate going, this will be something good for you. So what's a private lender? Essentially, it's going to be somebody who you personally know. They're not an institution. It's just somebody. It could be anybody from your RIA. It could be from somebody from a Facebook group that you've had time to get to know. You've had Zoom calls or you've met in person and had drinks. Generally, you're going to find people in your circles, whether it's your personal circle or your professional circle or your real estate circle. Anybody can be a private lender. You never want to discount anybody in your circles because you just never know who that person might be. So what's the difference between a hard money lender and a private money lender? I hear this all the time. Private money lender is just a person, whereas a hard money lender is an organization that operates as a company. Private money lenders, they have terms that are flexible, but hard money lenders have criteria and terms that are laid out very clearly. Private money lenders, relationship-based, and hard money lenders are asset-based. They're going to base whether or not they're going to give you money on the asset. Not to say that private money lenders don't do it based on asset. It's going to be first your relationship and then the asset. Now, if you have a self-directed IRA, this is what I do. I have a self-directed Roth IRA, and this is how I lend the bulk of my funds. It's great because right now I don't need cash coming in to my hands. So all of those payments that you saw earlier are going back into my IRA. And then once it grows more, then I can keep lending. So it's a snowball effect in my IRA. I do lend outside of my IRA as well, but prefer to keep it in as much as possible because I don't get the tax benefits of the interest that I would receive outside the IRA as opposed to having it sheltered in the IRA. So how do you make money? One, you can charge points. It's up to each individual lender how you want to do this. Some people I know charge points, some people don't. I charge a couple points in the beginning just to take care of any fees, paperwork that I'm doing, any walkthroughs that I do of properties that I'm interested in. It just pays me for my time in the transaction. I also do interest-only payments, but you can also do principal and interest if you want. But I find that a lot of people who are looking for private money, they're trying to keep their payments as low as possible so they can use their capital in doing the renovations on the property that they're looking to get. So they want to keep as much liquid as possible. Each time you turn a note over, you're going to make points again. So if you're doing points, if that's something that you choose, then you can make more money if you're doing shorter term. Now, not everybody's going to refinance their properties or sell the property that they're flipping in 3 months and get it back to you. I generally do 18-month notes, and but some people get back to me sooner, and then I just lend it out again. And then the other way is if you're tapped out, you've already lent to everybody. If you know other lenders, you can refer people that you either already worked with or vetted, and you can work it out with other people who are lenders in the area. Me, I used to do that, but we found that it was the same 5 lenders who keep lending to everybody. So now instead we just do the same terms for everybody. Based on a handshake deal, so that if one person's going to me and I was doing 10%, but another person was doing 12% and 2 points, that you're not losing that 12% and 2 points if I'm sending them back and they're expecting 10%. So you can work it out. It's all very fluid. It's however creative you want to be with putting all the terms together. So a little timeline, this is more for anybody who's doing BRRRRs. So the refinance is a big deal on this. You're going to review deals, let people know that you're lending out. You want to do all your documents with attorneys or a title company, and the borrower takes control of the assets. And I can't stress enough how much you want to make sure that your attorney is involved when you're doing this, to make sure that all the documents are recorded and that they're all correct, because you don't want anybody swindling you out of any money. I've heard of it happening. People think it won't happen to them, but I guarantee it could happen to you if you talk to somebody who does not want to use the documents that you are using, or an attorney that you're using. So over the next 1 to 17 months, it can be any time period, you're just going to collect that money while that borrower is renovating the property, whether they're doing a flip or whether they're doing a BRRRR and then going to refinance it. Now, at some point, they're either going to refinance or sell the property on the market. They're going to inform you that that's happening, and you'll know to be prepared to receive your money back. The reason why you want to know this is you want to get prepared to lend to somebody else, because you don't want your money sitting there not making any money for you. So you want your borrowers to make sure they tell you when they're about to refinance or move forward with that, because that'll give you about a month lead time. And if they're doing flips, you want to know when the property's going on the market. And flip should be a lot sooner than 17 months. If you're taking 17 months to flip something, we definitely need to have a strategy call. So the next thing is month 18, they refinance or they sell it, and you receive your principal back, and you can lend to another person. The pros of private lending are you're in first lien position. So if anything happens, you can seize the asset through foreclosure, but I'm going to talk about how to circumvent the long drawn out foreclosure process. And there's relative liquidity with these types of loans. You're not going to get asset appreciation or tax advantages. You don't want to do long-term lending. You're going to lose based on inflation. So if the rates are going up or down, you could lose it one way or another to either, if the rates are going down and you have a high interest rate for somebody, great. But if the rates are going up and you're locked into something long-term, you could potentially lose out on money by having a long-term note. And then if you're not familiar with the market on how to analyze potential deals, flips or renovations for buy and holds, that could also be an issue, because you want to make sure that the people who are doing their homework, that you can check their homework based on their deal analysis and repair analysis, that they're going to be able to do what they're saying they're going to do. And you can also choose to screen people. Maybe you don't want to lend to somebody who's new, but you want to lend to somebody who's been doing some stuff in the market that you're comfortable with. Then maybe you don't have to worry about that as much. So just a quick example, let's say you do $50,000 loan at 2 points, 10% interest with a 12-month hold time. You're going to make $6,000 on that $50,000. And like I said, you can cut it any way that you want. And that gives you an annualized return of 12%, which isn't too shabby. Are you getting that in the stock market if you're in there? Oh, I see someone's hand is raised. I will answer your question as soon as we are done, Sherry. So for protection, you're going to have a mortgage that's going to be recorded, a note that's going to be recorded, and this is what these number 3, the deed in lieu of foreclosure and confession of judgment. You're going to want to talk to your attorney about which one you want to use for your situation. Deed in lieu of foreclosure essentially means if they default on their note per your terms, they are waiving their right to a foreclosure process. So you will get the property back almost immediately rather than waiting 6 months to 18 months. You're going to do personal guarantee. And if the borrower is married, you're going to have the personal guarantee from the spouse as well. Because if you get a personal guarantee from one and not the other, everything can be transferred over to the other person, and you're kind of out of luck if they default. And you want to make sure you're the additional interest on the hazard policy for the property. What this does, anybody who's a landlord or works in insurance, if for some reason they got the policy and they wanted to cancel it, as long as you're an additional interest on that policy, you will get a notification that the policy was canceled. So for deal screening, I've talked to a lot of people and they're like, well, how do I find deals or how do I get lenders to lend to me? Let me go back one. So you're going to do a deal screen. And if you are in this presentation and you're looking for lenders and what to do, I'm going to show you an example of an opportunity package that has the deal analysis, repair analysis, the comps and rental comps. Let me pull that up. So this was my analysis or investment opportunity package for a property that I purchased. And what you want to do is you're going to wow people if you have something like this, especially if you're brand new. This will give you a lot of credibility. If you look at the supporting documents at the bottom, everything in this, it has the after repair values, it has the MLS data for those comps. It has the repair estimate. I did a rental deal analysis. You can look at the comps for the rentals. I use Rent-A-Meter if I need help with determining the market rate rent, and subject property comps, and then local points of interest. But if you lay out a nice, neat package, it really shows that you did your due diligence, and it gives lenders a lot more confidence in what you're doing. So you can see I did my comps, and these were the sold comps. And I just made these little maps with a star being the subject property, and these are the comps. You want to make sure your comps are within a half mile generally. Then I show the MLS data, the line item repair estimates, deal analysis. So I did a deal analysis for a market rate as well as students, because this is a heavily populated area of students. So I wanted to show, you know, what we were going to do if it would be one or the other. And then I looked at the other properties in the area to see what they were getting for rent, so that it flows back to this deal analysis, so that my lender knew that while they were lending to me, I would be making the income to pay them off before I refinanced. And then Rent-A-Meter, just to show, yeah, that 900 would be, or 925 would be a good rental rate for market rate. I then had different pages of all my MLS sheets, my rental sheet. Then I did this little points of interest, because if somebody didn't live in my area and they wanted to know a little bit about what I was close to, this gives you an idea of the location. And I took the Zillow information so they could see that, you know, over the next year, the prices were going to go up in value. So it all pointed toward a positive refinance for my lender, so that they knew I was going to give them their principal back. Okay. All right. And we're not going to go into how to analyze a deal or anything like that. So if that's something that you need to talk about, feel free to message me or talk to Kathy or anybody in your group. There's tons of YouTube videos, Bigger Pockets, you know, to help you with those things. So a couple things on structuring the funds. The borrower pays for all the costs associated with the funds being lent. That means they pay for the attorney fees. If you're doing it out of your IRA and your IRA has fees, they pay for the IRA fees and the lender appraisal. Now, some people don't do this, some people do. The lender appraisal, you could be the appraiser. You're not going to do a actual appraisal, but what essentially means is you walk through the property and make sure it's a property that if you have to take it back, that you like that property enough, or you see that value in that property enough to know that you'd be okay taking it back. But if the people already have a current appraisal within the past 6 months on the property, you can use that as well. My one lender, she charges $125 to walk through a property, because some people will tire kick you. So the best way to get people to not tire kick you is to put their money where their mouth is and pay you the quote unquote appraisal fee to walk through and make sure that you like that property. All right, so now I'm going to stop the screen share and we're going to go into questions, and I'm going to start my video, and I'm going to unmute everybody. or you can unmute yourselves and start your videos so I can see all your faces. And I want to talk to Sherry. Sherry had a question first. So Sherry, hi, how are you? Nice to see you. All right, so what questions do you have for me?
Okay, first of all, that was very fast and a whole lot of information.
Yes, and this is recorded, by the way, so I am going to put it up on YouTube. So if you need to play back, we can do that.
So I'm in a coaching program right now where the coach says she normally gets hard money for the purchase, and then uses private money for the renovations.
Mm-hmm.
In that situation, how are you going to, you're not going to be able to be in the first position on the lien.
Yes, you won't. That is, so when, now if you're, let's say, now are you looking to buy or are you looking to find private money?
I was actually looking at how to go about lending people money.
Okay, lending. Yeah. Well, that's the great thing about private lending is you make the terms. If you want to be first lien position, you write out your term sheet and you say, you know, if someone comes to you, be like, I have to be first lien. So if you have somebody else, you're going to get hard money. I'm sorry, I can't work with you. But let me tell you, there are plenty of people out there who will give you first lien position. So I wouldn't worry about people who are using hard money and using that private money. I'm surprised that she's getting people to do first or second lien to a hard money lender.
Okay, so you're saying that some hard money lenders don't mind being in the second position? It just seems like a very risky place to be.
Yeah, so no, most hard money lenders don't want to be in second lien, and most private money lenders don't want to be either. I'm sure there are some people who have a strategy of being in second lien position and have been fine and have been able to protect themselves. My recommendation, however, is if you're going to lend money, only be the only one in first lien position.
Okay.
Okay.
All right, thank you.
You're welcome. What other questions do we have? Anybody?
You know, I had one and then I lost it. This is Carla. Hi, everyone.
Hi, Carla.
Great presentation. Thank you, Dorothy.
Yes, definitely.
I'm a Pittsburgh native, but I lived in Erie
you're close to me, yeah.
I lived in Erie for quite a while. So when you pulled up your little example, I was like, oh, I can picture right where that's at.
That's great. I love it. It's a small world, real estate, isn't it?
It really is, yes.
Okay. Yeah, are you sure no one has any questions, or are you all having a difficulty figuring out how to unmute?
I have another question. I just didn't want to keep going. So I have an IRA,
okay.
And I never knew we could do things like this with the money in our IRA. How exactly do you do this? Like, do I call up my financial advisor and say, can you put some of my investments into cash so that I can start lending to people, or what exactly do you do?
Super, super great question. Super glad that you asked that. Actually, if you're with a financial advisor, most of those institutions don't allow you to do self-directed investing. So what you would need to do is you would need to find a self-directed IRA firm who deals solely with people who are working to direct their own IRAs. When you're with the institution that has a financial advisor is directing. Even though you're working with that person, they're the ones who are directing where the money is going. If you're with a self-directed IRA firm, you're the one who decides where everything is going. So there's tons of firms out there. Some of the one that I use is called Midland IRA. Some people use Equity Trust. That's another big one.
I have Equity Trust, and I've been happy with
Carla.
them. Yep.
Okay. Yeah. So if you have a question about either of those, you can feel free to message me and I can get you in contact, or you can talk with Carla, or anybody else that you know who might be private lending, ask them who they use. All private all IRAs are going to have some type of fee structure too, which is why I brought up having the borrowers pay for those fees as well.
Okay, so if you lend it, it's going to actually cost you money to pull it out and stick it back in?
What it does is the custodian, whoever the IRA custodian is for the self-directed, they have to do a lot of paperwork on their end because you're going to send in everything. You're going to send in the note, the mortgage. They're going to be the ones who wire the money. It just upkeeps everything. So, make no mistake, you are paying right now for your financial advisor to do the same thing. It's just a lot more transparent when you're doing it yourself. You'll know exactly what the fees are for the amounts of money that you're lending.
Okay, thanks.
Mm-hmm. What other questions do you have?
Dorothy,
I got a
could
question.
you, oh,
Ooh,
I'm sorry. Could you, after Cody gets his question answered,
sure.
would you mind quickly flipping back through your slides and maybe I can pick up whatever my, whatever my question was?
Yeah, sure.
Okay, thanks.
Yeah. Cody, what you have going on? How are you?
Good. How are you, Dorothy?
Good.
Good. I appreciate, first of all, the invite to the meeting here. A lot of great tips. And as someone that's not yet trying to lend private money and possibly trying to get lent the money for investment properties, I guess, would you say, because I've never owned a property yet and it's something I'm actively looking to do, I guess would be the best way to earn a private lender's trust would to be to do kind of what you explained in the slides with doing the deal analysis and bringing everything to the table first of all to
Yeah.
yeah.
Yeah, definitely. If you are new, and haven't done, one or two deals or a couple deals, um, uh, they you need to build credibility somehow. So if you're in different coaching programs, they'll call this a credibility packet. If you're in syndication, they call it an investment opportunity because what you're doing is you're teaching the potential lender how diligent you are in your information because it's going to blow a lot of people out of the water. I've seen people post deals in groups, and when they post them, they give very little information, just what the purchase price is, what they think the analysis is, what they think the repairs are. There's no meat to what they're showing. But if somebody's asking me, so Cody, let's say that you came to me and I had another person who was new came to me and you came to me with this 10-page outline of this property that you were looking at and was well thought out and I looked at the numbers and I was able to ask you questions. Heck yeah, I am going to be more interested in working with you than I would with somebody who just came to me and had something written on a napkin. So doing a deal packet, an investment packet or opportunity packet, whatever you want to call it, and being able to hand that to people when you have a deal is something that they may not work with you the first time, but sometimes it takes a little time to build a relationship. So you want to build relationships and have a credibility packet, and those used together, that will help propel you and get you some funding for your deals.
Gotcha. I appreciate that answer. And I guess because I could see myself as if I was a private lender, if someone brought that to me, I would totally be more willing to lend them money because they put more effort up front. But as someone that's looking to get lent money, I know you briefly mentioned YouTube and some other sources. Would you say just, I guess, research on there and figure out how to get all those numbers? And because that's something that I don't yet know how to do.
Okay. Yeah. I recommend if you're new and you haven't done any type of coaching or mentoring program, take as much information as you can that is online, get to know terms, understand different basic calculations like cap rate, debt service coverage, things like that. And you're eventually going to hit a ceiling where you're like, okay, what next? I feel like I'm being pulled in all these directions and I have no idea where to go. That might be a point in time where you actually want to pay for a class, take a class, work with a coach or a mentor, whether it's group coaching or doing a mastermind, because you never know if you'll find, somebody else who knows something you don't, but you know something they don't, and you can partner and learn with each other. So there's many ways to cut it, but get as much free information and then work with somebody who's done this before to help you propel yourself forward so that you're not taking 2 years to do something when if you would have worked with somebody, it could have taken you 6 months.
Yeah, yeah, of course. Well, I appreciate that's I guess all the questions I had for you at the moment.
All
Hey,
right, perfect.
Cody, you might
Yeah.
also, I'm not sure what area you're in, but look and see if there is a RIA, Real Estate Investor Association, anywhere near you. That's an invaluable source of networking, learning, opportunities to work with people. You'll get a lot of value from that.
Great suggestion, Carla. Cody, here we have the Apartment Association. It's been a little wonky because of COVID. So they haven't been meeting. I don't know when they're going to start meeting. I think they're doing virtual meetings now, but I would 100% recommend joining that and attending anything you can, even if it's virtually, so that you can start to see, you'll notice it's the same people who are going over and over again. And a lot of the players in the Erie market do go to that, just like any other market that has a RIA. And if you're not in the Erie market, I can't speak to what your RIAs are like. Not all RIAs are created equal. Some are focused on education. Some are focused on selling. They'll bring in people to present, to sell to you. So when you're thinking about joining a RIA, see if you can go to one or two without being a member. See if they're trying to sell to you or if they're actually trying to teach you. Department Association, we're very lucky. We actually don't allow any sales at any of the meetings or in group coaching or any get together hosted by the Apartment Association. There's no sales allowed. So it's really nice. So you should definitely join that, Cody, and anybody else who isn't part of their RIA as well.
Okay, and I will definitely do that. And since we're in the same area, Dorothy, what is it required to join the Apartments Association? I know I talked to Eric Hamill about it briefly, but I guess what's that entail?
What I'll do is I will message you offline after this, and I'll get you everything that you need to know.
Awesome. Thank you so much.
Perfect. All right. Does anybody have any other, let me see, I'm seeing some comments here. Okay. Yes, this is being recorded. I am going to upload it to YouTube. So yes, for Samantha. And then make sure you join First Time Flippers because they'll have the links in their group as well. And does anybody else have any questions before I go through the presentation real quick for Carla to see if she can figure out her question?
If
Sherry,
I can
do you have another
retrieve
question?
my thought, yeah.
Yeah, I do. It's the, you said you need to work with an attorney to come up with these forms. You definitely need to work with an attorney, yada, 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 attorney. Is this a specialized attorney, like a real estate attorney, or is this just any old attorney that you may have like had your estate plan, written up by?
Great question. You're perfect for this presentation. You're asking all the right questions. I love it. Most attorneys should be able to file a mortgage for you and look through the paperwork, but if you really want to make sure that you're being protected, working with somebody who does real estate closings or works with investors is somebody that I would recommend working with. So if you don't have somebody that you work with already, if you know other investors in your area, or you're in the RIA, or you're in a Facebook group for your specific area, you can just ask in that group who they use, and you'll probably see kind of the same names coming up over and over. That's who I would work with based on, or if you have someone who is a veteran investor, someone who's been doing it for a long time that just shoot them a text and be like, hey, Dorothy, who do you use for your real estate attorney? And that person should be able to give you some recommendations that you can feel comfortable taking.
Okay, thanks.
All right, let me share this screen. I'm going to quick flip through the presentation for Carla.
Thanks,
right.
Dorothy.
Can you see it now? You see the presentation?
Yep.
All right, so I'm just going to kind of like click through these slides. And if anybody else has a question while we're doing this, feel free to jump in. And if I'm
So
going
this
too
was
quick
not my
fire.
initial question, but I thought about this when you were talking to Cody.
Okay.
When you do your credibility packet, especially for like new people who don't have a lot of experience, do
Mhm.
you see people doing a personal credibility packet in addition to the deal analysis?
So most people don't do a credibility packet one way or the other.
Mm-hmm.
So you can add a little bit to it if the person doesn't know, if the person doesn't know you and you're trying to build credibility with that person,
Right.
sure, that'd be a great way to do it.
Mm-hmm.
But you want to try to use the relationships that you already have built and
Yes.
find those people who were always interested in real estate. And I'm going to give you a super ninja way to find out if people are interested in real estate, but they don't want to do it by getting their hands dirty. Whenever I meet somebody new, I just practice this, and it's amazing. One, everybody thinks real estate is sexy. So when someone asks you if you're in real estate, they're gonna be like, oh man, I always wanted to get into real estate. And as soon as they say that, that is your opening. This is probably gonna be one of the most one of the most powerful things you're gonna learn in this presentation or put in your toolbox ever. As soon as they say, man, I always wanted to get into real estate, you're going to ask them why they didn't. And they're going to give you some reason. The
Okay.
prices are too high where I'm at. I don't want to deal with tenants. I've heard horror stories. And the way you're going to respond to them when they tell you this is the exact person that you're looking for who would be a perfect lender if they have the money. You're going to say to them, well, you can do real estate without trash tenants and toilets, right? And they're going to go,
The 3 T's.
no, tell me more. And that is your in. And that's
Mm-hmm.
when you say, well, what I do is I buy properties and I have people who lend me money for those properties, and they're protected because they have a note and a mortgage on that property. And I'm just going to pay you until I refinance the property. And what returns would you like? And let them tell you what the return is. What are you getting in the stock market right now? Is it great? Is it crappy? And then you ask them, this is the other ninja question, what return would you be happy getting? What would make you thrilled? And
Uh-huh.
that's the rate that you tell them. That's amazing. That's exactly the rate that I'm giving my lenders. And they're
That's
just
great.
they're just going to be blown away. So those are my super secret, I guess they're not secret anymore, ninja tips for finding private money. I mean, if you're on a bus, if you're at a restaurant, if you're sitting in a waiting room, and you're just chatting with somebody on an airplane, those two questions will garner you a lot of success.
Mm-hmm.
The other ninja tip is you want to act like this is kind of dating. The person who chases loses. So sometimes if you're desperate for money, you're not going to find it. But if you're confident that you're going to get money, people will be more likely to work with you. Okay.
I like that approach about finding the people who care about real estate. I've always
Yes.
approached it as the people who care about money, right?
Oh,
And so
yeah.
my ninja thing is I'll just be like talking to a friend, acquaintance, person sitting next to you, right? And you'll say, yeah, like it's so great because I have these investors and like and you talk about, I just sold this property, I made this much, my investors made this much. And then they're like, oh, wait a minute, you have investors? How did they make that much money? What did they have to do? Like
Mm-hmm.
I always more approached it from, I'm just in conversation saying how much
Mm-hmm.
money I made these other people. And that's what ropes some of my private lenders in.
Yeah, see, it's
Yeah.
nice. There's many techniques, to get people interested. I like asking the real estate question because I feel that everybody thinks real estate is sexy. And when they tell you you're a real estate investor, they're like, that's so
Uh-huh.
sexy. I want to be sexy too.
Yeah.
So it's a good way to find out if they're interested.
Mm-hmm.
What questions does anybody else have?
Hi, Dorothy. This is Maria. Can you hear me?
Hi, Maria. Yes.
Yeah, so how would you go like about vice versa, like finding like my husband and I, we want to lend money to people. Like he just switched jobs last year, and then he has money that's sitting in his IRA that they're not doing anything basically. So how would he transfer those money to like self-directed IRA, and how would we find people that we would lend money to?
Great questions. Are you part of a real estate investor association in your area?
Yeah, I'm part of the Westchester group. I actually listened to your podcast with Rochelle the other day.
Oh, okay.
It was awesome. Yeah.
Great. Thank you so much. Oh, I love her.
Yeah, she's awesome. Yeah.
Yeah, so a couple ways is I will tell you that being the one who has the money to lend, it will not take long for people to find out that you're lending money. And what you can do is you can network with other lenders, so people in this group, or you can find people who need money, people in this group. These are good ways to, they're really anywhere. Or if you see someone posting in your Facebook group, whether it's the Westchester group, whether any type of RIA or any other group, or somebody that you know, other people who are in real estate, you can always be like, hey, do you know any, anybody who uses private money to fund their deals? I have a little bit of money, and people will start sharing information with you. So really it's just opening the question and asking other people. Oh, I see your question, Sherry. I will get to you. It's really opening your networking. I hate saying networking because I feel like that's quid pro quo, but building relationships within a real estate community in your local area, because most of the time people are going to be local that you're going to be lending to, because it'll be the most comfortable way to get started. And if you're crossing state lines, there could be differences in how the paperwork is done, and it adds a whole other layer of, okay, do I have to get an attorney, in this other state? So kind of staying in your area will definitely help. But just putting it out there saying, hey, send me your deal packet. Hold people to a higher standard, because you're going to have people who are going to reach out to you and they're going to give you 3 pieces of information, and you're not going to lend to them because you're not comfortable with them. But somebody who really wants to work with you and build that relationship with you, like let's say Cody was in the Westchester group, he's going to be like, oh man, Maria, they're lending. I'm like, let me get my credibility packet. I'm going to send that to her, about this deal I'm looking at. And then you can meet and have drinks or coffee, or do a Zoom meeting. And you're going to find out, okay, am I comfortable with this person? Are they willing to do the paperwork that I want? Are they okay working with an attorney? Like I said, if they're not willing to work with an attorney, you want to run as far as you can. And so that's how you're going to do it. It's kind of an organic process, but don't worry, you will find people. And if you want to talk more about this offline, I'd be happy to, hear your specific situation and give you some specific tips for finding people.
Yeah, that would be awesome. I'll definitely
Okay.
reach out. Thank you very much.
Yeah, definitely. And then Sherry asked, how did I learn how to do this? I learned how to do this because someone was lending to me. And I was like, man, and then I read the Tony Robbins book called Money, and I realized how much over the years I'd lost with financial advisors in the market, not just because of the swings of the market, but because of all the fees and how non-transparent they are. So I got a little mad, and then I was like, well, I'm going to take control of this and do it myself. And over the past couple years, I moved all of my money from my advisor to a self-directed IRA custodian, and I've been lending for 3 years now. So, and I learned how to do it by, as soon as I said that I want to do private money lending, I learned from the documents that my lender made me use, but then also in my RIA, I met a couple other private lenders and I asked them how they do it. And now we kind of all talk to each other and make sure that we're all protecting ourselves as well as the people we're working with. Because this is not a get over on somebody at all. If you're in the business trying to get over on somebody, you just need to leave the business to the rest of us. This is a way for you to give people and a way for other people to give to themselves. So this bolsters everybody by helping everybody. They're helping you, you're growing your IRA, or you're growing your, you're getting that mailbox money, and the other person, they're growing their portfolio, and it's keeping it local rather than going to big banks and going through all that rigmarole. Okay. And yes, apartment association, that's what our RIA is called. It's called the Apartment Association of Northwest Pennsylvania. What other questions do you have?
You touched on this a little bit earlier. I have friends, family who want to lend, but they have smaller amounts, right? So
Okay.
it's like, okay, that's really great. Thank you for your faith in me that you would want to entrust me with your, $12,000 or whatever it is. But how do you approach that? Because I'm going to need 4 of those people at a minimum to even fund a rehab, let alone a purchase in a rehab. So,
I totally understand what you're saying. So what I tell people who are interested in lending, who have smaller amounts of funds, not that $12,000 is a small amount, but when you're purchasing assets and renovating them and, you're in the
yes.
6 figures, it's a smaller amount.
Mm-hmm.
I generally don't want people to lend to me their last $12,000.
Mm-hmm.
I want somebody who already has, 150, 500,000 already in their accounts, so
Right.
that when they lend me 50, if I were to get hit by a beer truck and, or a tornado took the property away or something, isn't that kind of funny? Like, my name's Dorothy and a tornado takes the property away. I totally didn't mean to say that, but it's kind of funny.
Yeah.
So, but if something were to happen, like if the worst case scenario just kept hitting and hitting and hitting, would you be comfortable taking that last 12,000 from them? So I would say no to them. I am sure there are ways that people could get together and put the money together, but now you're getting into a whole other strategy where you're putting, like, syndicating people's money, or putting it into a group. And
Right.
that's definitely beyond the scope of anything I have done, in terms of getting private lenders in a group in order to fund. I'm
Mm-hmm.
sure there are ways to do it, but
Okay.
talking to a real estate attorney and asking that question is really the best way to go. And if you do find out that answer, I would love to hear
Right. I
what
know,
they come
because
up
it's like, okay, do you give first position to the person who lends the most? Do people
with.
really want,
Yeah.
second or even third
Yeah, the only thing I
position?
could
Like,
see is them putting in an LLC together, and I'm
yeah.
totally just off the cuff thinking if 4 people each had $20,000, they all wanted to go into an LLC and then lend that way, that might be a way. But I would definitely talk to an attorney about that strategy.
Yeah. Well, and that assumes too that the 4 people that have the smaller amounts have a connection with each other, which
Exactly.
usually they don't. So
Yes.
yeah.
So yes, for being a prudent investor, I'm prudent with other people's money, and
Mm-hmm.
sometimes saying no is the best thing that you can do, because you don't want them lying awake at night wondering if they're going to get their $12,000 back.
Yep. Okay. Thanks, Dorothy.
You're welcome. Any other questions? We have a couple minutes. Do you need an LLC if you have a self-directed IRA and lend money through it? No, if you're in a self-directed IRA, IRAs are going to be in your name. So you're going to be lending from your IRA. And when you talk to your attorney, the paperwork will actually have your name for benefit of, and then it'll have all your account information about your IRA, because the money has to go back into your IRA if you're lending from your IRA based on the rules of how IRAs work. And if you're looking for more information on the specifics of self-directed IRAs, shoot me a message offline and we can chat about that as well, and I can give you some information on that.
Hi, Dorothy.
Hi, Bernice.
How are you?
Great to hear
Good.
you.
So I'm good. I'm new to the Facebook group. I think I joined last week, and this is my first webinar with you guys, and it's been really good getting this information. I just had a question. Would you suggest, I missed the first 5 minutes of the call where you talked about who would be good as a private lender. But would
Mhm.
you suggest if you have a property that has a lot of equity in it to pull the equity out and use that for lending? Or is
It,
that not a good strategy?
yeah, if that's something that you're comfortable with, if you don't want that money sitting there and you could pull that out, and I mean, with rates as low as they are, do you have any idea what the rate is for pulling the equity out or doing a cash out refi for you?
So it is 2.7 something.
See, that's great. If it's at 2.7 and you pull it out and you lend at 10%, you're making that spread instead of that money just sitting in the house not doing
Right,
anything for you. You can make that spread, pay down that what you borrow in that
right.
equity, and then do it all over again.
Got it.
So it's
Okay.
it's it's not something that I have done,
Mm-hmm.
but I've heard of other people taking money. Like I have a line of credit that I've done that with.
Okay.
I didn't do it with a home equity, but I did it with a line of credit where my line of credit was 5 or 6%, and then I would lend it out for more, and I would make that spread. So
Got
yeah,
it.
so that is something that you can do.
Okay. All right. Thank you.
Yes, definitely. What other questions? Anybody else? Have a couple minutes. Does anybody have questions not on private lending that you would like me to answer?
I have another question. Let me just
Sure.
show my face. Show my face. Can you lend to yourself if you have a self-directed IRA?
No. So there's some rules with who you can and cannot lend to. You cannot lend to anybody in your downline. So you cannot lend, or upline. You can't lend to parents or grandparents, children or grandchildren. But let's say that you had a brother that wanted to borrow, you can lend to them because they are not in that downline. Now, I have heard of people figuring out some loopholes to lend to themselves. I don't do it. It gets too messy. I like to keep things as simple as possible. Let me ask your motivation on why you'd be curious about lending to yourself.
To save on the interest to somebody else.
Give me an example.
I need to renovate a house. I need $60,000. I have $60,000 in my own IRAs. I can pull it out and do my renovations, and then I can put it back in.
Gotcha. Okay. So one group that I heard of, what they do is it's a group of just private lenders who have money in their IRAs. They partner with each other. So let's say you and I both have money in our IRAs, and I have $60,000 and I want to do work, and you have 60,000 and you want to do work. Well, hey, why don't I do this? I'll lend you $60,000, 0% interest, and you lend me $60,000, 0% interest. We'll go do our things and pay each other back.
Okay.
Doesn't
great.
break the rules, but I've heard of people doing it. I haven't done it myself. I've heard of groups who, private Facebook groups where they do stuff like that. And they vet the people who are in this group. So it's not just random people, but people that you know. So that might be one way to do it. That's
Okay,
a
great.
creative way. So I'm not saying, now remember, I'm not an attorney. I'm not a CPA. These are just things that I have heard, around the water cooler, so to say.
I think also, Sherry, you can partner with yourself, but that gets very sticky and messy because you have to account for every dollar, and say you're doing 50% your own funds and 50% out of your IRA. Every check that you write to every contractor, to every utility company, you have to write 2 checks, half from you, half from your IRA. And then the proceeds and the profit has to all be accounted for, and 50% to you, 50% to your IRA. So like, people don't really like to do that because you'll get caught in the weeds and, could get sanctioned for not doing it correctly because it's just so much to manage. But I think there is a way that you can partner with yourself kind of, but you can look into it. I don't know anyone who's done it, messed around with it.
I've known people who've told me that they've used their IRA on their own stuff, but they've never really told me how they did it. And I'm always a little leery when things are very clear that you're not supposed to use it yourself. I would
Oh,
rather
and
err on the side of
also,
caution.
you know what? I missed the first minute or two here also, but did you mention, Dorothy, how like you are not allowed to work on your own on projects that are being funded from your IRA? Like
Yeah.
if you,
Yeah, so I did not mention that, but just for the sake of everybody in the group listening to this and anyone who might watch the recording, if you're lending from your IRA, just don't do it for yourself. Work with somebody else outside of your up or down line. It just makes it a lot easier, and you don't have to figure out all the nuances and risk getting caught. If you want to do it, however, I would highly recommend talking to your IRA custodian, whoever you work with, and tell them what you're looking to do and have them educate you on that specific strategy. Whether it's partnering with yourself, whether it's somehow you funded a project, because you can partner other IRAs and do projects together. I know that is allowed. I'm not sure the nuances of it. But your IRA custodian should be able to walk you through how to do these more creative lending strategies from your IRA if you're not looking to lend to people who are outside of your immediate family. Okay. And
you
then
know what? I was
Bernice,
wrong. I brought up the wrong thing. It's if you
it's
purchase a
okay.
property in
Huh.
your IRA, you can't do the work on it yourself.
Yeah.
I was getting a
I
little, it's not about lending. It's about if you own the property and you
purchased the
purchase it,
property. Yeah.
you can't do any of the work yourself. Yeah.
And
Sorry for the
I'll just,
confusion.
it's okay. I'll make a quick note about that, about purchasing property in your IRA. This is just my personal opinion, but always speak to your CPA and your real estate attorney. But your IRA is a tax shelter. When you buy property, you get write-offs. When you put a property in your IRA, you no longer get those write-offs. So why would you put a property in your IRA? Why would you not lend to somebody and, just lend to somebody and make it easier?
Yep.
Instead of having to manage a property that's in your IRA and you get none of the benefits. It never made any sense to me, but that's just, somebody else has a different opinion or they have experience with that, great. But I was like, why would I want to do that if I don't get any of the benefits? So that's just my opinion. And then Bernice, yes, I can ask Kathy if she's okay with me, or I can give Kathy the link to post Rochelle's podcast that I was on. She had some great guests that you should listen to all of them. I love them. So I will talk to her about that. But if she doesn't share it, I'll just share it with you directly.
Absolutely. Go ahead and post it. Not a problem
Okay.
whatsoever.
Thank you, Kathy. All right. Well, does
Certainly.
anybody else have any other questions or anything? It looks like we're going to wrap up here at 7:00. Like to hear any feedback that you have, anything?
Thank you.
Oh, thank you. Yeah, if anybody wants to reach out, feel free to drop me a line. I'm on Facebook. Pretty easy to find. Anybody wants to do a strategy call, I'd be happy to talk with anybody, do a strategy call, and help anybody in any way I can.
Yeah, and Dorothy, feel free to put your link to your group too up there. I have no problem with that either.
Yeah, definitely, will do. And Carla, yeah, definitely drop me a line and let's chat, and I'll look forward to chatting with you.
Very cool. Thank you.
Awesome.
Hi, Kathy.
Right.
Nice to see you, Kathy.
Hi, Carla. Hi, Sherry. You guys be good. Stay out of trouble.
Yep.
All right, everyone, enjoy your night. And if you have any private lending questions or house hacking or BRRRR or really anything, feel free to drop me a line. I'm always happy to chat.
Thank you.
Bye.